Morning, everybody. It's 8:25 a.m., March 17th. Welcome to my channel. Now, this market had a bounce on Friday. It bounced and kind of just made one move, consolidated, but pretty much stayed within bounds. So, wasn't really like this ripping, roaring, like huge move. So, and it's still, even though it pulled back a little bit, it's still within this bounds range, even as I'm speaking. So that's what's going on now. This week we have FOMC. We have what else we have this week? I'm just trying to see what else. Nah, big thing is FOMC. So FOMC, and I saw that Nvidia is having some GPU conference this whole week. So I don't know if there's any news going to come out of there. We'll have to see. But without further ado, welcome to my channel. My name is Steven Gonzalez. I use market profile and volume profile to find structure in the markets along with supply and demand, gamma exposure levels, the most traded price of the year, the month, the week, and the previous day. All helps me have an edge in the markets as well as market internals, which have point me in the right direction every day. Now, important to note, all right, we have quad witching this Friday. That means you have futures options, right? You have futures options contracts expiring. You have future, not options, futures contracts rolling over. You have index options, and then you have stock. So that's the quad witching. That all happens on Friday. So tons of money that will come off the table, and then we start a new contract in futures, index, futures options, stock. Okay, so it's pretty big this Friday. That's why, like, you're going to see you might see some weird moves this week. You might see some weird moves in futures because there's two contracts now. Now, the one contract that we've been in still has a little more volume than the that I think this is the June contract. The next one, it still has a little more volume. Probably tomorrow I will roll over, but until right now I'm not gonna roll over. So that's what's going on there. All right. So, of course, I do this every morning. You can join me. That would be great. Give you the lowdown on the markets, the story, leaders and laggards. We'll look at the economic calendar. Then I give you long and short trade scenarios on the ES and the Nasdaq. All right. And if you enjoy my content, please smash that like button. That would mean a lot to me. All right. I think we're going to right into this watch list here. Alrighty. So we got our little VIX. That was up to almost a 28, 29 VIX earlier, so that's come down. It is up 2.20% at 22.5. What else is going on here? Crude. I'm liking that. I'm liking crude. I actually put an options bull call spread on crude futures. So looking for a move. It's kind of bottoming out. So and it's in ultimate balance. I'll share the price of the month and the week are equal. So hopefully get a big move out of that. 30-year bonds are being bought. Gold's flat. Nasdaq's down 0.17. Dollar's down 0.17. ES down 0.30. The Dow's down 0.45. 10-year yields are down 0.46. Russell is down 0.51. Silver is down 0.60. Ethereum down 1.29%, and Bitcoin down 1.77. Moving on to the Max 7 Plus. Let's look at that. AMD leading the pack, up 1.15%, followed by Netflix, who got an upgrade. They are up 1.11. Nvidia is up 1.01%. Let's see what news that was. So some news just dropped. Retail sales and New York Empire State Manufacturing Index caused a little bump in the markets. I don't think it's going to be too big, but that's what's caused some bump in the market just now. Um, let's see what else I was looking at. Meta, you got Broadcom's up 0.12. And we'll go down to some laggards here. You got GE down 0.19, JP Morgan down 0.19, Berkshire Hathaway down 0.19, Boeing down 0.27, Microsoft down 0.72, and Tesla down a percent. All right, moving on to sectors. Leading the pack today is semis. Now that is not much. 0.14 is not a lot. Okay. And then we got a bunch of flats, and then we have some laggard. So Staples is down 0.16, Industrials down 0.28, and Financials is the laggard today, down 0.49. All right, let's get into the economic calendar. Now, like I just said, retail sales just dropped. Empire Manufacturing, let's just see, 0.75. All right, so this was supposed to come in at minus 0.75, came down into minus 20. But the markets are pushing up right now. So then we have really the start of the week is Wednesday, FOMC. So FOMC at 2 o'clock. And that's pretty much it for the week. All right. Now let's see in the juice. Let's see retail sales. You can see, let's see here. And there's a lot of stuff going on. The Houthi leader ban on maritime shipping in Red Sea will include U.S. ships. Then it says Houthis, I don't know how you say that exactly, attacked U.S. warships in response to airstrikes. So there's a lot going on in the world. Let's look at some news here. Fed officials report a laydown marker on impact of Trump policies. It says new economic projections from Federal Reserve officials this week will provide the most tangible evidence yet of how U.S. central bankers view the likely impact of Trump administration policies. Trump trade war to sap Canadian, Mexican, and U.S. growth, OECD says. Okay. Exclusive Intel new CEO plots overhaul of manufacturing and AI operations. Intel's incoming CEO, Lip Bhutan, has considered significant changes in its chip manufacturing measurement methods and artificial intelligence strategies. Trump says no exemptions on U.S. steel and aluminum tariffs. Now, this is the pretty one that Bessent, the Treasury Secretary, says. Bessent says there are no guarantees there will not be a U.S. recession. There are no guarantees there will not be U.S. recession in the United States, although there could be an adjustment. Treasury Secretary Scott Bessent said in an interview that aired on Sunday. Okay, so I believe the markets came down with that a little bit in the overnight session from Sunday, but we're pushing back up right now. Let's see if there's any other news here. Yeah, see, this is what I was talking about. NVIDIA. When NVIDIA CEO Jensen Huang takes the stage this week for the company's annual software developer conference, he will defend his nearly 3 trillion chip company's dominance as pressure mounts on its biggest customers to rein in the costs of artificial intelligence. So that's this week. See, Tesla, the company, is launching a free trial of its full self-driving service in China from March 17th to April 16th, Tesla said on the Chinese website. All right. All right. Now, let's look at if there's something here and then we'll move on. Nothing here that I wanted to really see. As far as the market in general, let's look at some charts to look at the overall breadth. This is the one chart I like to show. And you got a rise here. I was talking about this last week. It's a nice breadth indicator. It's the percentage of stocks over their 20-day simple moving average. All right, we're at 27%. Generally, this is overextended market, and you generally get a pop from here. You can see right here, we got a pop. We were all the way at 16%, and now we're at 27. So that's a good barometer to look at. Okay, if we're looking at some bullish percent index here, it's at 37.6% of the S&P 500 is on buy signals. Obviously, that's not very strong. And if we go to it's not giving me. Let's see here. Let's look at the NYSE. Why is it not giving me that? That's annoying. Usually it gives me the NYSE option as well. There we go. NYSE. That's just the whole entire exchange. 36, so very similar. Okay. And look at a couple ones here. New highs minus new lows. That improved. See, it came down to all the way down to here, minus 243. That means more stocks are making new lows. But coming back almost to parity here. And then lastly, the AAII sentiment. All right, let's look at the bullish sentiment. Only 19% still of investors are bullish. And let's look at the bears. 59% of the investors are bearish. All right, so still kind of not looking great. All right, those are some of the overall breadth indicators that I like to look at. I think we can get over. Actually, there's one more chart I want to show you guys here. I've been busy making my own little charts here using Python or whatever. So I looked at a lot of individual stocks, but this is just a seasonality of the SPY, right? And right here is volume. So these gray bars are volume, and it's pretty interesting. Over the weekend, I noticed that the highest volume of any month all year this is over the last 10 years is March, the month we're in. I didn't really know that March was the most heavily traded month in pretty much almost every stock I look at. So this just shows seasonality, right? Now this little I want to call it gold line shows 5 years, and this shows the overall for 10 years, the blue. Now you get your lows of September, you get your highs in November. That is not a surprise. But generally here, look what happens in March. You generally go down in March, kind of bottom out, and then you go up into April. So this is seasonality is really working out what it's exactly supposed to do. Okay, you get weakness in March, right? You could get down here, and then you basically take a little leg up. So just wanted to show you guys that. Didn't know at all March is the most traded month of the year for the last 10 years in most stocks. So very interesting. Moving on to the daily charts. All right, so look at this SPY. Like I said, I've kept saying that does the SPY want to touch this trend line from all the way back? All the way back. I'm just keep on getting thrown off by that. All the way back here. That is from 4/19/24. So we got a touch here, and now we got that anchor VWAP from last year is right here. So we didn't make it down there. Now we only right here stayed within balance. We didn't really break balance. Okay, you could see we didn't even reach the previous week's range. Okay, that's pretty telling. Where are we at now? 563. We're at 563. So we're right at the highs of Friday. So accepting higher prices. So in the short term, that is bullish. Right, get a quick look at futures. So you can see holding higher prices here, still within this balance area, and still, right, there's last week's range for previous weeks. Okay, because in futures had already moved on to last week's range. Okay, so we're moving on to the Qs. All right, so here's the Qs. Now the Qs, a lot of stocks that I looked at over the weekend have all been bounced. A lot of them been bouncing off of the 2024 anchored VWAP. Look at right here, and I mentioned that. I mentioned that a lot, and I mentioned that on Thursday morning. I said this looks like it's bottoming out, and the Qs it keeps bouncing off this anchored VWAP of 2024. Right? I did put a trade on here on this day towards the lows. It's called a back spread. I took it off close to the highs here, so it was a nice trade. It only cost me 37 cents, and I think I took it off at $1.50 and $1.80. So pretty nice return on that. And I mean, I could have still holding on to the back spread though. You don't want to fool around with those too much. Anyway, now let's where the Q's now 481.25. So 41.25, right at the highs. Right at the highs. Let's go futures. So look at the futures. You're above right now. You're pushing up. You're about to take out the highs of Friday here. Oh, we're really pushing now in both markets. So this is, like I said, we really tried to go lower here and we couldn't. This would really cause a nice push up if you basically can have all these shorts cover today. Okay. Let's move on. Let's show our little Mag 7 ETF here. Let's see how they've been doing. Now notice, this is the Mag 7 ETF. Under the 2024 anchor view up, under the 200-day moving average. So that's how this looks. Came down to this key support level. Okay. Now moving on. We are going to do the triple-headed monster. All right. That's our bond market. The dollar and the VIX. So let's look at the 10-year yield. Remember what I said. Keep saying, is this going to be the swing low? Because look what we're dealing with here. 200-day moving average, 2024 anchored VWAP, 20-day simple moving average. So is this going to be a swing low and we take a leg down? And then we got to look at that 3.991 yield. Okay. This is your triple headed monster. Now we're going to go to the dollar. The dollar's really been tanking lately. We're hitting this key support level here. Right here. If you look to the left, right here. What is it going to do? Don't know. But it's consolidating here. Okay, it's consolidating. Then we go to the VIX. That's our fear gauge. We've had a very steady dose of fear here. It is coming down. Right? We are moving lower now. The VIX is at 21.83. We were hanging out around the 28s, 29s up here, and we are coming down. Okay. Can we break under 20 today? Don't know. We do have FOMC this week, but I think everybody feels a pause is coming for the FOMC. All right, that does it for the triple-headed monster. Let's get over to the volume profile, market profile. Let's do that. Just give me a sec while I pull that up. All right, let's move over here and we'll look at this together. Now, like I said, my levels are still on the current contract. All right, I didn't move it over, and I won't do that. Most likely, I might do it after the market close today if the volume gets more in the next contract. Okay, so let's just look at this together. And this is your market profile and volume profile here. And we can see what we have going on here. Let's get my marker out and we'll mark it up. Get some key levels. All right, let's see what we did on Friday. Friday was interesting. The volume went down. Okay, so we opened here. Excuse me. We opened here, right? And then we kind of pushed up, came right back down, and then right there was the move. Boom. And then you just literally did barcodes until they close. Okay. But we didn't, like I said. Okay, let's put this back. Because here's our balance area, right? Right in here. We didn't violate the balance area. Even right now, look at these highs. This 56, 56, 48 right here. Look at this. That's basically your balance area here. That's a confluence high here. So this 56.48 right there, it lines up over here, and that we need to get out of there, right? We stay in balance otherwise. Now we had this, some people call that liquidity sweep here at the lows right there, and that was it. And then we've been pushing up, right? So it's all about what are we going to do here, right? Now we're with value areas here, right? We have a little thin profile here from this day, and then the bulk of the trades happened here. Okay, now the most traded price of the week is 56.20. Okay, so market wants to stay above this level, 56.20. Okay, so key level 56.48 right there. Need to get above that. Okay, need to get above that, and we have a key level here. Confluence, that's your confluence high. Here's your confluence low. You have the value area low, lines up with the overnight low, and you have a demand zone here. Okay, so that's another area bulls want to defend that. All right, then you have more demand, right? And then really this demand zone is the last line of defense for bulls. Okay, so let's go scenarios. We're going to start with the bull side. Okay, so price is right there. Price is right there. Okay, remember we have the most traded price of the week right here. Okay, most traded price of the overnight a little below that. So bulls, right? What could we do? A couple scenarios here. You could push up, pull back right to these highs, and finally make our way start up. And you have a big vacuum pocket here of not a lot of volume. You could definitely go up to the month to day VWAP 57.18. Really extreme would be 57.40. Okay, now what could we do as well? We could pull back. Now we're going to pull back right into this demand zone, and if we don't spend too much time underneath the 56.20 and you come up and hold, same thing, can move up. These are my favorites, okay, because this means you stay at the top of the balance area and you can give a shot to go up higher. If you fall back below this week low, I don't think, you could, we still got it, we could, but probability is not on your side. So could we? Yeah, I mean, could we even do this, come down here and then look for a bounce at last week's lows? Possibly, but this is not, this is more the only thing I'm interested in. Okay, so let's go back to a bear scenario. All right. Remember, these levels are all here for a reason, right? So right here, price. Okay. So what would be a nice little fake? Because now look, you got lower high, lower. I mean, sorry, lower high, lower high, lower high. Bulls getting paid. So what you want to do is see if you're a bear. You want to see a push up, reject it, come through the open, and then that's your first play to 56.20 right here. Most traded price of the week. If you go down and you can take out this confluence low, which is your overnight low and your value area low, let's just call it 5600. If you could take this out, find accept prices down here, then you're going to probably test Friday's lows. And there's a lot of demand here. So I don't expect this to just get ripped through. If it does get ripped through, that's market general information, and this market is going to go down and test this area again. Okay, so really you need to see a swift rejection here, fall back, and then we'll be back in balance. And if you come back into range, yeah, you're mostly going to test the other side of the balance range. Okay, hope that makes sense. Let's move on to the NASDAQ. Okay, NASDAQ, same thing. Okay, we're in balance. Okay, and there's a bunch of big levels we need to talk about. Okay, let's talk about them. So we have this 197.88 to 197.78. This is your top of balance. You need to accept value over that. Now look, the NASDAQ is relatively strong. Okay, it is gapping up very slightly. Okay, coming up to not last week's lows, the previous week's lows before that. Okay, that would be something to get into this range again. Okay, but this has been resistant multiple times. 1, 2, 3, 4. Okay, that's why it's big region, a big zone that bulls want to accept value above this. Okay, now we are in ultimate balance. That level is 196.50, 196.50, let's call it. This level. You want to hold above that level, right? If you violate this and go back down, puts all these buyers on their heels. Okay. Now, same kind of deal as when we are gapping up very small here. We have a confluence low here as well. Value area low, 1 in 563. Okay, it's lining up with the overnight lows. Okay, and you got a demand here. Now it's very similar to the ES actually. The only difference is this is ultimate balance. Most traded prices of the month and the week are together. Big moves happen from these levels. All right, so if we do come back and hold, this should give a very big move from here. Okay. All right. What else do we have? Really just a lot of demand down here. Now this is that big level, that 190.27, I believe. This area. It's a very big high volume node. Used to be the most traded price of the rolling year. That has moved higher, but it's still a huge high volume node. That is the defense for the QQQ, and I've been talking about this, that I don't see this getting broken yet. Okay. All right. So let's go into scenarios here. We're going to start with bull. Okay. All right. Let's start with the bull case. All right. So prices here gapping up. Now this is such a small gap, but this is the gap fill right there. And this puts us in that area that it needs to break and hold. right? So what could happen? Obviously, gap and go. This is a high volume node from the past. We definitely can tap this and pull back into this area and see if you can hold it and try to go up to the month to date VWAP 199.58. Okay, into the supply. So that's definitely doable. Now what else? Come back, fill that gap, right? But I think it's so close that we can come back in here to ultimate balance, and you can maybe hit the top of this demand zone and really just hold. See if you can hold and work your way back up to here. And right now, if we go under this level, you just need to defend this level of 195.50, the overnight low and the value area low from Friday. Okay, now you don't want to see acceptance below this level, so we could just come really quickly, boom, hit it, hold, and move higher. Anything below this, I'm probably not interested in a long. It's not going to make sense. Okay, now let's go to the bear side. Okay, the bear side is this. This is that region that you need to break out of. That's balance area high. So just before I showed you bulls, what they needed to do. So bears. So even if we came up here, boop, tried come to the open, you're gonna test this most traded price, the ultimate balance. What do you do here is crucial. So if you come through this and start accepting value lower, lower, keep staying down here, and you break this confluence low, the 195.50, boom, you're probably going to retest Friday's lows. Okay, that really puts buyers on their heels. And because we failed at the balance highs, generally you're probably going to still go down to the other side of balance. Maybe test last week's lows, 191.40. Okay, and there's your monster level. That 190.27, that's that big high volume node. Now, of course, you got a lot of demand here. We could bounce, but generally, when you fail, this would be a look above and fail, or not even a look above because you're just in balance. You haven't even broken out yet. So we just have to see. That's my scenarios that I like. Okay. So hopefully you enjoyed that analysis and you smash that like button. That would be much appreciated. All right. And I do this every day in the AM. And hopefully come join me. All right. Give you the story of the markets. Show you how market profile and volume profile and all that come together, and just to give you a framework, right? It's not about me teaching you how to trade, but it's about showing you, I guess, a system of how to look at the markets, right? Instead of just staring at price action, because hey, I get fooled a lot sometimes still with price action because you get excited, but structure cannot be beat. All right, structure cannot be beat. So everybody, hope everybody has a great day, and I'll most likely see you guys tomorrow. Now, as far as my Discord server, I've been doing a lot of work behind the scenes, been writing code with the help of AI. I don't write code, but without the help of that, I've been building a lot of apps. So it's been taking me away from some of that. And today, I think we're going to get finally a little bit less in volatility. Okay. So for right now, I need to concentrate on I'm building a new system with this new volatility. So right now, I still update my weekend outlooks. You can still go there. I still will update during the day, but I'm just going to be a little less involved with that for the time being until I roll out some new things that I want to do. Okay. So anyway, hope everybody has a great day, and I will see everybody tomorrow.